So let's turn now to our two guests for their outlook for the economy and the financial markets in the second half of the year. We have Josh Feinman, Global Chief Economist at Deutsche Asset Management, and Tom Stringfellow, President and Chief Investment Officer with Frost Investment Advisors. Welcome to you all. Josh, I'm going to start with you. It looks as though things have steadied out in the economy. We're seeing some pretty steady growth. How does the second half look to you?
I think the economy is starting the second half with pretty good momentum. It looks to be in good shape. Much of the cyclical repair has been done. The labor market is largely healed, and I think it will get to the line, if not a little bit over, by the end of the year in terms of full employment. I think the fundamentals still look pretty good to continue moderate growth. The question, of course, or the issue is structurally potential growth in the economy is diminished. And that's not something that lends itself to quick or easy solution. But from a cyclical perspective, I like the economy. I think it's likely going to continue.
So, Tom, what are you looking for in the markets in the second half of the year? It's been a pretty good first half, not just in the U.S., but globally. Yeah. Is it likely to continue? What should I be watching out for?
I would agree. I think it's going to continue. Everything that Josh had mentioned about the economy does play into the markets. You know, there are some concerns. We've had concerns, this first half of the year, last year, a number of sectors that can't seem to get traction or maintain traction. I think that does continue into the second half of the year and going into probably 2018. There's a number of sectors that I think are very positive. But, this is going to be
like
an active.
What? Give me a couple of names.
I would say financials will be positive in through next year.
Good news from the banks last week. Yeah.
Absolutely. Technology, I think, continues to be a positive. Healthcare, and healthcare, especially healthcare technology, I think continues to be positive.
All right. Josh, you say that there are some pitfalls, though, to watch for in the second half of 2017 and maybe the beginning of 2018. What would they be?
Well, I was saying some of the structural forces, the trend, we're living in a slower growth world. I think that's still going to be with us. The issue was raised earlier on the program about the policies coming out of Washington. A lot of people are banking on tax reform. I think we're going to get something, but of course there's a risk that that falters. I think that's a potential downside to watch. And then the inflation question. Inflation has surprised on the downside. I think it is largely reflecting transitory factors, but we're going to need to see inflation move, up a little bit further for the Fed to continue on this gradual path of raising interest rates.
So, Tom, let me hit you with a double question here. One is domestic oriented, and that is, how concerned are you about the value of stock prices right now? Are they a little stretched, a lot stretched, or roughly where they ought to be? And number two, is the U.S. a better place to invest now for the second half of the year, or should I look overseas?
Good questions and spot on. I'd say the stock market is a little stretched these days. For it to continue, we've got to have obvious earnings growth. If we can stay in a kind of a low inflationary environment, investors will love that. Not fixed income investors, but equity investors will appreciate that. I think the dynamics between the global, the U.S. markets are really interesting. It's going to be dependent on, the strength of the dollar, where investors want to move. Do they want to come back to the U.S.? But if you look at some of the multiples, the foreign markets are a little more attractive these days.
Josh, you get the final word. Where would you be putting money to work right now?
I think that with the economic cycle still having further to run, I still think risk assets, equities, credit product still look good. Although I agree, we are getting a little bit stretched in valuations, and some of that is predicated on us getting tax reform done.
All right, gentlemen, thank you. Josh Feinman, Tom Stringfellow, thank you both for joining us today.
Thank you.
Thank you.
Well,